Okay, so let's just jump right in. We've got a major military conflict blowing up in one of the most critical economic spots on the entire planet. Tensions, they're through the roof. And yet, the US stock market is hitting all-time highs. It makes absolutely no sense, right? It feels completely backwards. But believe it or not, there's actually a weird kind of logic behind all this madness, and we're going to break it down. I mean, this is the big question, isn't it? You're probably looking at the headlines, seeing all this chaos, and you're just scratching your head at the market's reaction. If you are definitely not alone. It really does feel like the world is on fire, but over on Wall Street, it seems like they're popping champagne. So, what gives? What is actually going on here? And this chart, wow, it just lays the whole paradox out perfectly. On one hand, you have shipping traffic through the Strait of Hormuz just cratering, down a staggering 95% in March. But at the exact same time, the tech-heavy NASDAQ is up 6% for the year. It's wild. One chart shows a vital global artery getting squeezed shut, and the other looks like a party that never stopped. To figure out how both of these things can be true, we've got to understand just how high the stakes really are. So, first things first, let's talk about this place, the Strait of Hormuz. I know, it might sound like some distant name from a geography class, but trust me, its importance to the global economy and probably to the price you pay for gas is just massive. Think about this. Every single day, 20%, 1/5 of all the oil that gets shipped by sea goes through this one tiny little waterway. It's basically the jugular vein for the world's energy supply. And here's why that choke point is so critical. The whole area around it, we're talking Saudi Arabia, Iraq, the UAE, that region holds almost 60% of the entire world's proven oil reserves. And to get all that oil out to the rest of us, you guessed it, it pretty much all has to squeeze through the Strait of Hormuz. Which brings us right back to that jaw-dropping number, a 95% drop in traffic. Seriously, imagine the main highway into your city just suddenly shuts down. The chaos, the disruption, it would be massive. Well, that's what's happening right now on a global scale. So the big question is, how on earth did we get here? Okay, let's do a quick recap of the timeline here, because this situation blew up really, really fast. It went from a regional scuffle to a full-blown global economic crisis in what felt like the blink of an eye. So it all kicked off in late February with military action. At first, the market kind of expected it to be over quick, but then things took a turn. On April 7th, peace talks completely fell apart, and that is always a really bad sign. Just 5 days after that, the U.S. officially announced its plan for the blockade, and by April 13th, boom, it was in effect. And how was this massive move announced? Well, how else these days? On social media. It was this weird mix of, aggressive posturing and then this reassurance. The goal was pretty clear: squeeze them economically, force them back to the table. But this move sent shockwaves everywhere. Well, almost everywhere. It seems like the stock market only heard that last part of the message. It will be over soon. And that brings us to the real heart of this whole thing. We're going to break down the 4 key reasons why Wall Street isn't just shrugging this off, it's actually rallying. The logic might seem totally bizarre, but hey, it's the logic that's moving trillions of dollars around the globe. All right, so here they are, the big 4. Reason 1, markets are always looking to the future. 2, tech is king now, and it doesn't really care about oil prices. 3, and this is the weird one, a war can actually make it more likely that the Fed cuts interest rates. And finally, number 4, when things get scary, there's often no better place to park your money. Let's dive into each one. Okay, first and probably the most important thing to get your head around is this. The stock market is basically a giant betting machine. It's not pricing things based on today's scary headlines. It's pricing them based on what investors think is going to happen 6 months or a year from now. And right now, the big bet on Wall Street is that this whole mess gets sorted out and fast. And honestly, history is on their side. You look at past conflicts, you almost always see a quick dip and then a really strong recovery. Reason number 2 is that the market itself is just different now. This chart of the S&P 500, which is pretty much the 500 biggest U.S. companies, shows that giant tech companies make up more than a third of the whole thing. So just ask yourself, does a fight in the Middle East really stop NVIDIA from selling chips? Or stop Microsoft from selling cloud services? The answer is not really. Their businesses are pretty much insulated from oil shocks, and because they're so huge, they're dragging the entire market up with them. All right, number 3. This is where the logic gets really twisted, almost ironic. Here's how it works. A big conflict creates a ton of economic uncertainty.
If it looks like the economy might slow down because of it, what does the Federal Reserve do? They get more likely to cut interest rates to help things along. And for the stock market, lower interest rates are like pouring rocket fuel on a fire. So in this really strange way, the bad news from the crisis actually creates the potential for good news from the Fed.
And finally, reason number 4 is pretty simple. Where else is all this global money going to go? I mean, think about it. Europe, they're way more exposed to an energy crisis. Emerging markets, money usually flies out of there when a conflict starts. Japan has its own long-running economic issues, so almost by default, the US market ends up looking like the safest port in a storm, and that flight to safety just shoves even more cash into US stocks.
Now, all of this might sound like some weird 2026 only phenomenon, but it's really not. If you actually look back at history, you can see that the markets have a pretty standard playbook for this kind of thing. You look at the Gulf War in 1990, the Iraq War in 2003, even the Ukraine invasion in 2022. The pattern is almost spooky in how consistent it is. You get that first hit, a tip, as everyone freaks out, but once the worst of the uncertainty is over, once the bad news is actually known, the market doesn't just recover, it often takes off. It seems like for Wall Street, getting rid of the unknown is even more important than the news itself being good.
Okay, so we've kind of decoded the market's strange logic, but what does any of this mean for you, for the average person? How should we be thinking about this kind of chaos? Here are the 4 big takeaways. 1. Remember that when it comes to stuff like this, the market's reaction is almost always a short-term thing. 2, it's not the initial spike in oil prices that matters, it's how long they stay high. 3, and this is maybe the most important, try to avoid making emotional decisions. Don't chase the rally, don't panic sell. And that leads to number 4. For anyone investing for the long haul, history tells us that the best move in these situations is often no move at all. So for now, the market's logic seems to be holding up. Its big bet on a quick fix, its reliance on big tech, it's working. But it really does leave us with one last big question. While Wall Street seems to be celebrating, you have to wonder, what could happen? What's the one event that could be big enough, scary enough, to finally break this whole pattern and shatter the market's confidence for good?